When last week we didn't see any moves on the 5-year loan prime rate on mortgages, we're scratching our heads going, what's going on? And we now may be seeing more targeted measures.
Yeah, that's right. This is what we're hearing essentially. So Bloomberg exclusive, as you say, but about 90% of home loans in China could be impacted by this. So quite big in the sense that it's going to impact a lot of people, but still it is that debate. As you were saying, just as what we had with the loan prime rate decision last week, it's really about investors trying to understand how meaningful any sort of action or lack of action in China is going to be. So in terms of the details of this, so China banks, they're expected to cut rates on existing home loans. And that's going to be achieved by trimming the premium on the reference rate. So in China, floating interest rates, they're typically set at a premium to the 5-year LPR, which has been the reference rate for mortgages since August 2020 it was announced, or 2019 it was announced rather, and implemented over the course of about a year. So trimming that premium is most likely going to be benefiting mortgages or mortgage holders that were contracted before the housing round started at the end of 2021. So we're still unclear as to the exact size of the reduction, but we do understand from sources that it could be imminent and that it's also going to be applying only to first home buyers. So that's one step that we're hearing about. And then the other that was also discussed in our exclusive report was that China banks could cut deposit rates. So that would be for the third time this year. It could be across key tenors by between 15 and 20 basis points. Lower deposit rates, that's going to really help lenders at least protect their margins because they're going to be lowering or expected to lower rates for home buyers as well. But the big question, of course, is if it's going to be meaningfully propping up sentiment here, and we can get more reaction on that later in the hour.
There are other signs of financial stress in China.
Yeah, I mean, Heidi, every day we have a new sign of financial stress that's popping up in China, but the latest one just coming in overnight, and this is revolving around a key investor in Zhongrong International, which is the trust firm that's really considered to be at the heart of China's shadow banking crisis. Now, we understand that the key investor, this is Jingwei Textile Machinery Co., it's planning to delist its shares. That was what it put forward in a filing to the Shenzhen Stock Exchange yesterday. The company, why exactly is proposing to do this or pushing ahead with doing this? They're citing market changes for the move, also significant uncertainties. Now, they didn't make any sort of reference to Zhongrong International in there, but we do understand that Jingwei does rank as a top shareholder of that shadow bank with just around a 37% stake in it. So it's a very rare move to come across from what is a central bank or a central government bank-backed enterprise, but it does really tell us just how significant these concerns still are about financial contagion within China.
And